any other cycle, this level of selling would have crushed the market. Instead, we're seeing something new: resilience and immense absorption. Bitcoin has bounced every single dip below $100,000. In fact, in June, it spent just 7 hours under $100,000. And this week, it has spent less than a total of 2 hours underneath $100,000 before bouncing right back. That tells you there's a deep structural bid underneath the market. ETF demand, corporate treasury buyers, and new sovereign entities, and individuals and institutional investors quietly soaking up every coin that old holders are unloading. Even as sentiment hits extreme fear, the market seems to be finally finding its floor. Bitcoin is now 20% off of its all-time high, which is the same zone where prior bull markets found their mid-cycle lows. If we're still in a bull market, and I think we are, we're near the local bottom. But if we're at the start of a bear market, look out down below. But here's why I don't think that's the case. We haven't seen a blow off top. There hasn't been any mania. We haven't seen any vertical parabola or retail hysteria. This cycle's defining feature has been absorption or redistribution of coins from the old guard to the new, rather than euphoria and then a steady climb higher. Selling has been met almost one for one with buying during each of these periods of consolidation, leading to an unusually flat price structure for nearly a year. In any prior cycle, a 20% drawdown alongside 500,000 old coins hitting the market would have meant disaster and the start of a bear market. Now it seems to be barely a flesh wound. JP Morgan also recently issued a $170,000 price target for Bitcoin within 6 to 12 months. Of course, take price targets with a grain of salt, but they're saying that perpetual futures deleveraging is complete and that Bitcoin remains undervalued relative to gold on a historical basis, which is something that I've spoken about before. And even more striking, despite the 20% drawdown, 99.5% of the assets in US spot Bitcoin ETFs have not sold. The selling is coming almost entirely from spot Bitcoin holders, those who've been holding for anywhere from 2 years to 10 years who want dollar liquidity, not from institutional allocators who are jumping ship. In fact, they are making up the buy side that's scooping up those coins happily at a discount. That's a total inversion of how Bitcoin used to function. The market structure of Bitcoin is fundamentally different today than it was just 2 years ago. Retail used to panic sell every single dip in the past, and we would have had a blow off top. But now the bid is stronger than ever, and institutions are holding through the volatility. This isn't 2017 or 2021 before. It's a different market structure entirely. So if this is still a bull market, and all the data suggests that it is, then this year's consolidation was not weakness. It was the foundation for the next move higher. As James Check says, consolidation builds floors, not ceilings. That's all for today's video.